Hi and welcome. In this video, we are going to discuss what accounting is and learn how to make journal entries. Anna had a lifelong dream of having her own bakery store, and which she opened. But she realized that she has to keep track of things, money in, money out, and she's worried how to do that. Her friend Bilal is here to explain how to do that. So Bilal says that accounting is going to help her keep track of things. With a relief, Anna wants to know more. So Bilal says accounting keeps track of the following for the business: assets, expenses, liabilities, revenue, and capital. Assets are the valuable things at the bakery, which are owned by the bakery, such as ovens and tools and equipment. Expenses are the cost of running the bakery, rent, utilities, and insurance. Liabilities are what the business owes to other, such as bank loans. Revenue is money in from the sale of bakery items. And capital is what the owner gives to the business. So what Anna invests in the business will be capital. Accounting provides important information to run this business. And this information is documented in financial statements. There are four financial statements. We have an income statement, balance sheet, statement of owner's equity, and a statement of cash flow. We'll talk about those in some other video. Now, Anna is very interested in knowing more and knowing how to keep track of these five things. So Bilal explains that the first step in keeping track of these five things is to know the debit and credit rules. So Bilal goes on to explain those rules. So the debit and credit rules. Now whatever happens in the business either increases or decreases these five things. Now these increase and decrease are measured by debit and credit. So if assets and expenses increase in the business, we will debit them. For example, if Anna purchases more equipment for the bakery, equipment, which is an asset, increases, Anna will debit equipment. Similarly, if Anna incurs cost of running the business, such as utilities, that's an expense, it increases, it will debit utility expense. Similarly, if these things decrease, we will credit them. So if Anna pays for the equipment, cash will decrease, cash will be credited. The rules for revenue, liabilities, and capital are the opposite of the rules for assets and expenses. So increase will be credited, decrease will be debited. So if Anna takes out a loan from the bank, now the bank loan is a liability. It increases, so bank loan will be credited. If Anna makes sales, sales will increase, and sales are revenue, we will credit that. Similarly, if Anna pays more money in the invests more money in the business, capital increases, so capital will be credited. And the opposite is a change in them will be a decrease, that will be debited. So let's illustrate that with example, but important thing to remember is that debits must always equal credits. So the amounts of debits must always equal the amounts on the credits. The first tip in keeping track of these five things is to prepare a journal. Now this is how a journal looks. We have a column for date, a column for the names of the account, debit column where we are going to write debit amounts, and credit column would be where we are going to write credit amounts. So let's look at a few transactions. Now the first transaction is owner invested $100,000 in the business. Now we need to record that in this journal. So we need to first thing to do is to record the date. In the account column, we have to come up with the names of that we need to debit and credit. So reading this transaction, we can see that the business got $100,000. $100,000 is cash. Cash is an asset. Increase in asset will be debit. So we have the first line, which is cash. and we are going to debit cash $100,000. This cash came from the owner, and whatever comes from the owner is called capital, and the owner capital in the business increased. Increase in the capital will be credited. So that's the first entry, the journal entry. Let's make a few more. Now on the 6th of the month, business borrows 50,000 from the bank. So again, the first thing is to write the date. Now we need to come up with the first line. The first line is always a debit line. So the name, we need to find out the name to write in the account box. The name is, if you read the transaction, you will figure it out. So business borrows 50,000 from the bank. Now that means the bank will give the business cash. So the first line would be cash, and cash will be debited because it increases in the business. Since this cash came from the bank as a loan, it's a liability. Liabilities increase, and we are going to credit them. So you can see that the debit amounts will always be the same as the credit amounts. Let's look at a few more transactions. So on the same date, this business paid for YouTube advertising 5,600. Let's enter the date first in the date column. And now we have to figure out what the name should be for the debit line. Now, since it's advertising, and advertising is the cost of running the business, one of the costs of running the business, it's an expense. An increase in expense would be debit. So we will choose the name advertising expense and debit the amount 5,600. Now reading, we need to have a credit because the debit amounts must equal the credit amounts. So far we have only the debit amount, but we need to have a credit amount also. So the word paid in the transaction indicates that cash is down, cash will be credited. So we're going to credit cash. Another transaction is the business buys equipment 10,000 on account. Now again, we'll start with the date, and we are now going to figure out what to debit. So it buys equipment. Equipment is an asset. Assets increase will be debited. So we put in equipment and 10,000 in the debit box. So we need to have a credit line also. Reading the transaction tells us that this was purchased on account. On account means buying now and paying later. So this creates a payable for the business. Now payable is a liability, and we are going to credit accounts payable $10,000. On the 9th of the month, the business bought supplies for $500 cash. So let's enter the date. And now we need to figure out what the name for the debit line will be. Since business bought supplies asset that increases after purchasing them. So we are going to debit supplies. Now what about the credit line? Since we bought the supplies by paying cash, cash is an asset. Asset decrease will be credit. So we are going to credit that. On the 10th of the month, cash sales for the first 2 weeks are $7,000. So again, let's enter the date. And now what is the debit line? It's cash sale. Cash sale means the business got the cash. So we are going to debit cash. This cash came from selling something. Sales is revenue. Increase in revenue is credit. So we are going to put sales revenue $7,000. On the 20th of the month, the business paid rent for the current month, $3,000. Now let's put the date first, 20th of the month, and the line item for the debit is going to be rent. Rent is an expense. Increase in rent will be debited. And reading on the sentence, it says that it paid it. Paid means cash down, which is an asset, and assets down are credited. On the 24th, sales on account were $2,100. So the business made some more sales, but this time they are on account. When sales are on the account, we call them accounts receivables. So let's enter the date first, 24th, and the line item for the debit is going to be to debit account receivables, because for this sale, the business did not get the cash. It will get cash in the future. That's a receivable. Since it's made a sale, sale is revenue, increase in revenue is credited. And let's look at the final one. Drawings are $400. Now, drawings are what the owner takes for personal use. And let's put the date first. So the line item for the debit is going to be drawings. Since the owner took cash, cash decreased, we are going to credit cash. So this is how we keep track of what happens in the business, the first step in accounting, which we call a journal. Rewatch this video again and again so that you understand how the journal entries work.